In the meantime, the coronavirus continues to dominate headlines as well as the markets. In fact, take a look at shares of Regeneron. The company requested for emergency use approval for its antibody treatment. So is the potential for a therapeutic a good enough signal for investors to jump into the broader markets right now? And if so, what should you be buying? Joining us right now to talk about this is Greg Branch. He's a partner at 1847 Financial. Also, Sarah Ketterer, who's the CEO and portfolio manager at Causeway Capital Management. And welcome to both of you. Greg, why don't we start with you? I know you look at this as kind of buckets of stocks, things that are buckets 1, 2, and 3. What do you put in those buckets, and which ones would be something that you would actually dabble in right now?
Right. So when we're talking about the general market, the bucket that I'm most attracted to are stocks that are poised for significant growth in 2021, provided we have a vaccine and therapeutic treatments. Stocks that not only exhibit triple-digit earnings growth next year, but also are attractive on valuation relative to the market and their own history. And in fact, you can get this with a healthy dividend in some cases. And so for those sectors, I'd be looking at financials, which are trading at a discount on price to tangible book to their history. I'd be looking at certain segments of consumer discretionary, gaming, for example, where the names that are levered to Asia are going to swing from a negative this year to over $3 in profit and a dividend of $3 or more next year. So I do think that there are some opportune areas as we look for a rebound in the economy, again, provided we're going to have a vaccine in the first quarter and return to some semblance of normalcy next year.
Hey, Sarah, when I think about what to be buying, I know that you've looked at some of the things that have been undervalued. If you're watching just the general markets, we are talking about the Dow less than 5% from its all-time high. You've looked at new highs that have been set by the S&P 500 and the NASDAQ multiple times this year. But that really doesn't tell the overall story of the markets. If you were looking at the S&P 500, those FANG stocks, they're up about 40% or almost 40% for the year. If you look at 490 of the other stocks in the S&P 500, they're only up by about 1%. So when you start digging through this, what is it that you like? What would you be attracted to? And is this a buying signal now?
That market concentration is very specific to the U.S. market and, interestingly, to the emerging markets where some Chinese internet stocks have really dominated performance. Outside the U.S., however, there are many opportunities and markets are much less crowded. So it's not just a stock-specific recommendation, but we think of this as very geographic. We're globally really interested in Europe, for example. There are a number of companies listed there that have hardly moved. In fact, there are many that are down double-digit percentage teens year to date, which for the U.S. investor, I mean, sounds shockingly awful. But these stocks are very representative of what happens in the world of cyclicality when the market anticipates recession. But we're now moving with vaccines in the first half of next year and an end to this pandemic. We're moving into an environment where both consumers and businesses will be much more confident. And as a result, the market will begin to anticipate recovery. And the stocks that are most geared to that are definitely in the cyclical category, such as financials, industrials, consumer discretionary. And this is true globally.
Shepard Smith here. Thanks for watching CNBC on YouTube.